I had it muted. I'm so sorry, guys. Just my first time doing this. Thank you so much for saying that you couldn't hear anything. What I was saying is that this is my first time doing a live, so it'll probably be a little rough. Case in point, the first minute or so that is on silent. Thank you for tuning in. We're doing this today because there is no SoFi Weekly. Yeah, I'm really excited to be doing this. So we'll mostly talk PayPal, PayPal earnings. I'm calling it the PayPal Once-ly because I don't think that I'll do this other than just occasionally from time to time. Some weeks PayPal has a lot of news, like this week, certainly because of earnings. And some weeks, it's not so much. So it's a fun company to follow, but it's not like Palantir where every single week there's something major. It's more like SoFi where there's amazing weeks and then there's weeks and weeks on end where pretty much nothing happens other than the stock changing price. So probably most of you guys are PayPal investors. If you're here, we might talk a little bit SoFi and Robinhood or even some Palantir as they have earnings on Monday. Let's get started with this. Let me share here. Well, let me put it in the full size. So if you want to see something bad, if you think PayPal's earnings are bad, they were okay. Like I'd give them a B grade. We'll look at their earnings in a little bit. What was really bad were my predictions. Now these are actually comical. So I was expecting a triple beat. They didn't have that. Double beat for sure. So I was guessing $8.11 billion. So an 8% year over year increase. Instead, they actually came in with a 6% year over year increase. Some of my reasoning was fine, but there was something major I missed that we'll talk about in a second. And adjusted EPS was $1.11. Instead, they came in with $1.20. So an even greater beat than I expected on that. So that's a really nice beat. Adjusted EPS, by the way, the reason why that PayPal uses it, and I like it actually here for PayPal better, is under Alex Chris, they've started putting in the stock-based compensation into those numbers. So it's no longer as skewed as it is for many, many companies, including some that I follow. So, and then the guidance, I thought it would be raised substantially. No, it was not. It was raised very, very slightly. Mostly, there's one area that it wasn't. So, analysts were actually pretty much right on the money. They, of course, missed it on adjusted EPS. And some of the reasons. I won't go into this whole post. I was right on active accounts, margins halfway right. Ended up with the dollar neutral revenue actually being right. It came in about the same as it would typically. And yeah, but overall, I missed it. So what did they actually do? Well, here it is. PayPal revenue actually came in almost flat quarter over quarter. It is up 6%, and this is dollar neutral. If the dollar is neutral to other currencies, since it's a global company, that actually helps PayPal. Just imagine if that wasn't the case this quarter, this would have been pain points. So revenue was a miss. It's a first big miss like this, although it missed by $90 million. If you look at the actual revenue, this is $7.8 billion. So that's like a 1% miss. It's not that bad. But it's still a miss. It's not great by any measure. So what I am interested in, though, for PayPal too, there's one other thing that I noticed in the earnings that I didn't like. Alex Chris had alluded to how they were doing so far with Fastlane, and they said that they've rolled it out to 1,000 merchants, over 1,000 merchants rather. Well, they have 30 million merchants, and I know not every one of them, especially some smaller ones, will want Fastlane, but hopefully those are on the larger size as far as enterprises. But this launched in August. They had development day later in that quarter. It does take a couple of weeks, 2 to 3 weeks, to implement everything fully if you're a large enterprise. I was hoping that number would be 10,000, 50,000, something like that. So yeah, it's a slower rollout of that than I would like to see too. So those two numbers were a bit concerning, but let's focus more on revenue. Why did they actually miss here? This comes down to what Alex Chris and his team had said earlier, is that they were having these conversations, and they mentioned it last quarter in earnings, and I guess I wasn't paying enough attention, but they were going into these large enterprises that use Braintree. Braintree, you may know, is the white label payment service processor for PayPal. It's not their branded. And let me scroll down to the breakout here. So PSP, unbranded card processing, that's basically Braintree. And branded checkout right here is, let me blow it up just slightly more. That's the PayPal button. So this is what most people that are not PayPal investors think of as PayPal. Of course, they also own Venmo as well. And you look over here in the right column, you can see this current year, the growth, and then the percent of total. So right now, payment processing is a larger percent than the actual branded, and it's also growing at a faster rate. But if you look at the growth rate versus last year, Braintree was growing at 32% year over year. Now it's 11%. Now, some of that is the law of large numbers. The larger that number of processing that Braintree does, typically the slower it grows, just because it's already a massive, massive amount. But there's a little bit more going on here. Alex Chris and his team, and Alex Chris actually directly with some CEOs too, we're having conversation with existing users. So maybe people like Uber that use PayPal for this. Shopify's actually started using PayPal for payment service processing on Braintree as well. But they were basically saying, hey, we don't like this prior strategy that resulted in 32% revenue. Now, why wouldn't they like that? Well, the reason is at the time, when I was newly invested in PayPal, there was this discussion among some insiders and among those in the industry that what PayPal was really doing to get this result was not making Braintree so much better than Stripe and so much better than Adyen, but instead it was like, hey, we can offer a rate that is just ridiculously low. And some allege that in certain cases, PayPal was actually losing money just to be able to do the payment service provision, because they thought, hey, maybe we can do some other merchant services, some other value added services. And by launching those, all of a sudden, like, hey, we'll make some money back up, even if we're losing it on Braintree. Now, that was not a long term winning strategy. It was causing a couple of things. Yes, 1,000 Fastlane customers is very embarrassing. Let me see if I can throw this up. Aha, it works. Yeah, that's not good. We'll have to see how it ramps up in quarter four. Like if we see like it going from 1,000 to 2,000 in quarter four, that's when I'll be really concerned. Businesses need some time to decide whether Fastlane is right, how they want to implement it, what strategy they want to go about. So, 1,000, it's just slower than I expect. But yeah, if it's 2,000 in quarter four, there's something seriously wrong, and we need to talk to Alex Chris about that. So, yeah, I wouldn't say that they're destroying Braintree here. What's happening is they're saying, hey, we're not willing to actually offer this product at a loss anymore. They've actually improved Braintree quite a bit under Alex Chris, not just the other value added services, but they want to price to value. And so they say, hey, one of the conversations that Jamie Miller, the CFO, said that they had as a hypothetical was they'd go in and they'd say, hey, we would like higher margins. And the customer's like, well, the product is a little bit better. I can give you a little bit higher margin price. That's fine. They don't love these discussions, by the way. No customer's like, yes, I'd like to pay more money, but they understand where the team is coming from. But the offset is instead of doing like maybe 95% of their payment processing on Braintree, they bump it down to 75% because they're like, hey, this is where we're comfortable. So really, we expect in quarter four, based on comments in the earnings, that this trend will certainly continue in quarter four. They actually guided down for revenue being in the low single digits. So if we were only concerned with revenue, and that's what we're fully focused on, I mean, this would be really bad. But there is a silver lining here. And so the offset is basically they're getting a little bit higher margins. And so let me go back to this a year ago. So Dan Schulman's last quarter, I know Alex Chris presented these earnings, but he came in very late. And so these were under Schulman's previous strategy. This was causing, or it could have caused, a pricing war between Adyen and Stripe and PayPal. And PayPal would, frankly, lose that war at that time. Braintree was, I think, fairly decent, but maybe not quite as good as Stripe or as Adyen. And Adyen themselves, they own their own tech stack, which means basically that they have better margins on payment service processing. PayPal didn't have that. And so ultimately, this would be a lose-lose, that PayPal would lose, Adyen would lose, and also Stripe would lose. So it's really, really not good to be in this sort of thing versus in this environment. That's really not the case. And in fact, PayPal has been partnering with Adyen to offer their Fastlane product. So what does this mean as far as actual margins? So we can see here the good numbers. Transaction margin growth is one of these. Let me throw up actually one of my most recent posts here. So right here. So this kind of goes into those good numbers. So transaction margin dollar is one of those figures that did well. What this is really, it's actually better than net income based on GAAP. That's essentially what this is net income for actual transactions. So none of the other stuff, just transactions. What did PayPal actually make after all of their expenses were paid on transactions? And we can see here that they, have been fairly flat for a while. And on a year-over-year growth, actually under Schulman, -7%. Part of that was, COVID lapping. Not really fair to compare that. But we can see here, a lot of 4%, 2%, 1%, 1%. And it started accelerating some, but some of this acceleration was due to interest rates that they were making more off of customer cash and deposits. This quarter, of course, and last quarter, they grew by 8%. And so you can think of this as 8% real net dollar growth. And 6 of that 8% was due to them actually improving performance on the top and the bottom line, not just from interest rates being favorable for PayPal, because eventually they'll lose that. And so transaction margin dollars are continuing to climb, which is really good and healthy. You can see these peaks, by the way. That's mostly just because Christmas season. So expect another one of these big bumps. It'll be kind of curious where that actually comes in because it'll be compared year over year, but they always have a really good fourth quarter. And then we see transaction margin percent. And so this is the percent that they actually make on their transactions overall. Now, this is not their take rate. This is not their transaction expenses either. But you can see that it bottomed here at 45% in quarter one, 2024. And as they're having these discussions, they mentioned last quarter and this quarter as well, that unlike all this other time when Braintree and also Venmo depressed transaction margin percent, now it's actually improving. And so long term, that's very good for PayPal. Short term, that's not the best. So quarter four, it may be another quarter where they miss top line revenue, but we'll see. And even EPS, they guided down a little bit just because they have marketing spend that they shoved off as far as an expense into the second quarter is one of those reasons why it was light on the adjusted EPS. But I think it'll be coming pretty good year over year. Free cash flow certainly is good. One other thing that I liked to pull this up here. This one's kind of fun. Let's do that here. All right, so this is from the SEC filing. And I was kind of curious about this. Somebody had shared this with me earlier, but this is their buybacks. Buyback is not like the main thesis for PayPal, but it is part of it. And you guys will like this. So you can see a monthly breakdown of what they actually purchased. And so July 1st through July 31st, when PayPal was much lower, average share price that they paid for was actually under 60, and we're a lot higher now at the mid 70s. They bought back 15.3 million shares. Alex Chris was like, hey, we're coming out with some really good stuff. Hit that buyback button right now. And so then they actually bought back more in that month than they had August and September combined, and also in June, I believe, as well. So that was really good to see. They, of course, reiterated the $6 billion buyback. You can see $6 billion over here. They actually did a little bit more just because they wanted to get that in before the stock price rose up a little bit. So that was one of those fun little notes too. Free cash flow also looked really good. Let's go back here. So there's that non-GAAP EPS, non-GAAP operating margin, very, very good. So basically, you can think of it as a quarter their top line money was a lot less for PayPal than expected. Bottom line was actually better. And so that overall is good. It's not amazing. Oh yeah, one other thing that was really, I thought, excellent, and it was part of the bear thesis was, let me just hide that real quick, so you guys aren't having to see me scroll. It's user growth. Here we go. So this is account activity metrics, and so this has been part of the bear case for a while, the active accounts. So under Schulman, he was kind of a growth at all costs type of guy. And long term, that was killing PayPal. So The argument and the bear argument was like, hey, you can see here that they had 426 million users, active users, users that used PayPal at least once throughout the year, and it had grown up to 432, then 435 million, and then starting in quarter one 2023, that number actually began inflecting downward all the way until we bottomed here in quarter four 2023. So all year long, and even Dan Schulman in quarter two and actually quarter one and quarter two, he said, hey, it's going to inflect. It's going to inflect. The problem is they were basically paying money, subsidizing people to use PayPal at a loss for PayPal. It wasn't causing new growth, but Dan Schulman is like, hey, let's pump revenue. Let's pump active users. Doesn't matter if we make a buck. Alex Chris is like, hey, making a buck is why we are here as a business. So let's make sure we do this right. And so you can see, of course, here they started inflecting actually in quarter one, but that was on a sequential basis, not a year over year basis. But this was the first time in the third quarter, and that's going to actually continue, and I think accelerate because of some of the new products they have coming out in quarter four. So that's good. It's not the most important number. I'd actually argue that revenue, even top line revenue, is more important, and of course, bottom line is more important as well. But it's significant. Okay, Nola says he loves charts. Yes, you do. Need PayPal monthly if possible, not once-ly. Yeah, once a month may be very doable. I wouldn't mind doing that at all. Customer service chatbot is in beta and it's useless. I've used it once or twice over the last quarter. It was okay. It wasn't great. Robinhood is using AI for their customer chatbot. It's a lot better. It's a lot further along. So hopefully that's something that they do fix over time. Walmart is actually killing it. Walmart is one of those that this time last year, I never bought, but I targeted it as one of those companies that is going to benefit insanely from AI and they've been basically developing their own tech stack for a while. They've been shifting towards online purchases as well. I saw what they were building. I'm like, hey, this would be a great investment. You just can't invest in everything, and I didn't have a lot of extra cash at that point, so I didn't invest in Walmart, and it's up a lot this year. But and yes, just starting my channel, so thank you guys for being part of that. So active users, let me show some other breakout numbers too. So this is total payment volume, revenue, and take rate detail. So there's some mixed bag here too. So total payment volume has gone up. That's good. US total payment volume is actually flat sequentially. It's up slightly year over year, 9%. Where they're actually lagging a little bit more. International it was only 8% growth year over year versus 10% and 18% in those last two quarters. So that slowed down a bit. And cross-border is about the same. Peer-to-peer, that doesn't matter as much because it's actually low revenue. But, you can see that there. Venmo's doing okay. But here's two numbers that are not amazing either. It's a little bit expected with some of the conversations they have, but that's total take rate and transaction take rate. So you can see that this continues to go down. This is what PayPal actually makes, the percent that they make on their transactions on average. Now, why is this actually falling? It's a mix shift. So let's go back real quick to where we saw the branded and unbranded. So quarter over quarter growth for branded is 6%. And it's 11% for Braintree, and Venmo is 8%. Guess which one of these has the highest margin? It's the one that's growing the slowest, right? Fastlane is going to probably help push that out a little bit, but it's also going to scale the unbranded as well. So as unbranded continues to grow faster than branded, and as Venmo is growing, although they've improved some of the margins there, but as that is growing faster than branded, expect that to continue to decline, although that decline is going to get smaller and smaller. And I actually think that at some point they're going to bottom and inflect slightly just because of some of the things that they're doing on the back end. You can see that rate of decrease here, 1.89% versus 1.86%. I mean, it's not good that they're dipping, but that's a small figure. And the transaction take rate as well slipped a little bit as well. So bears may bring that up. They're right to. It's not great. But it's just good to be aware of that. Now, another area that I thought was actually pretty interesting was this other value-added services revenue. They've launched a few products. One of those is what was it called? Fraud prevention as a service. It's something close to that. And they've mentioned that these are scaling out well. We see some actual year over year growth versus shrinking and being flat the previous 2 quarters. And so it's really good to see that take up. This right here tends to be higher margin products as well. Not always the case, but yeah, I think that that's going to be a good thing that'll help those margins over time. And yeah, they are a very international company. So you can see that 42% of their revenue is international. This is not a US company only. And that's why they always share their revenue on a dollar neutral growth. Let's see. On April Fools, I'd love to see a video with just an AI modified photo of Tanner to the left of the screen, just there. That's an idea. There's a little while from April Fools, so we'll see what we can do. You guys have any questions or anything that you want to ask about PayPal specifically? As far as myself, I'm not changing any of my positioning. I ended up buying some leaps for the end of the year 2026 in December that are, I think, $100 strikes. So it's not it's out of the money, but it's not ridiculously so. I did this before earnings, and so I think I'm actually up overall on those, but not as much as before earnings because we've fallen. Looks like growth is still limited. Oh, only margins could improve, or is there a market share to take? So this is actually a really good question. They are this whole sector, payment service processing, PayPal and other companies like it are disrupting the world lines of the world, the global payment networks, those payment service providers that really have not changed much since the 90s. Now, PayPal, their margins can improve. They, of course, have their stablecoin PayUSD that is right now mostly scaling on Web3, although they have been using that for their international payment system, Zoom. But if they can shift a lot of payments over to that, and they've been, I think that it's kind of a pilot program, what they're doing with Zoom right now, just to see how they do. That's XOOM, by the way. It's not Zoom, the web streaming. They don't own that. But if they do that, margins are going to be phenomenal for them because, again, they don't own their own payment service or they don't own their own backend as far as the technology. They're basically paying an intermediary to do that, and so their margins here are not as lucrative as they would be. So, but they are also launching new products. So, the neat thing about this quarter is it came in soft. It came in below my expectations. I'm not going to say it's amazing. It's not. It's solid. It's even good in some areas. I'd give them a B. Like an 80%, 85% maybe. But this quarter really didn't contain anything that they launched. We saw partnerships with Adyen, with Shopify, with Amazon. We saw, of course, Fastlane launch kind of midway through the quarter. We saw the advertising platform actually launch 2 quarters earlier than we expected, which is under Dr. Mark Gurther, and he is phenomenal. He actually launched Uber's advertising program. He led that team, and he was a part of Amazon's team to launch advertising as well. And Amazon, like they look at their earnings, like how much they actually make from advertising. These are high margin products. And it'll take a while for that to scale, certainly. But I expect that it'll be, since it's already launched for holiday season, that we will at least get some of that in guidance when Q4 comes out, just to kind of know where we're going as far as a business. I think that although it's a very different style of advertising, that PayPal can look at that, what Uber is doing as far as their growth and their ramp, and expect something similar. So that Uber, I didn't see this most recent quarter, but they basically have a $1 billion per year run rate with very, very high margins. And so that's going to impact them certainly. These other partnerships will as well. So there's plenty of market share to take. It's just going to take a couple of quarters to really begin seeing that. Q4 will not be that quarter, although they will be, I think, begin to guide for that. PayPal is back under 80. That's correct. It's not a bad time if you long here, if you like it, to DCA. I'll wait until earnings are done with the other companies that I'm in. I'm buying some Robinhood right now, not buying SoFi, not buying Palantir, but there's a couple other companies that I would like to build out those positions a little bit more. And so we're going to see where the dust settles there in a couple of weeks. Canadians couldn't ever name a live string like us Americans. That's right. Yeah. Uh, Alex and Jamie need to be a little more optimistic during earnings call. I think that they are. If you listen when at the very beginning of the call, Alex and then Jamie are just reading literally off a script. They're pre-prepared marks. And frankly, that is not Alex Chris's best, and I think Miss Miller the same way. But once you actually get in the Q&A period, people are asking questions or they're being interviewed by an analyst. That's where Alex and that's where Jamie really shine. They do a phenomenal job. But it's a little wooden and stiff always reading from something, especially if that's just not how your personality works. So it is better than his second earnings call, I'll say. So, oh, I know even when Jamie talks, the stock is going to tank. That's not always the case. She actually went in, I think this is 2 quarters ago, and talked at one of these analyst conferences and gave some very good numbers for where PayPal was and what they were looking at. And the stock actually spiked. It went up a lot. Not when Alex talked, but when she talked. She's pretty good. Appreciate you, Nala. That's really kind. George, good evening, Roy. I didn't have a chance to listen to the call. Did PayPal authorize additional share buybacks? They did not. They reiterated that they are looking at $6 billion free cash flow and also $6 billion in buybacks. And of course, they have scheduled $5 billion on buybacks next year. In quarter 4, I'm sure that they'll say what they're doing specifically for that. Free cash flow looks like it's going to continue to stabilize and go up. And actually, I should show free cash flow. Let me pull that up real quick because that's really important. Actually, I had it right here. Add it to stage and make me small there. Free cash flow and capital allocation details. So here that is. We can actually see this right here, this top line. Actually, I would more stick to the bottom. Once they started doing the and scaling the buy now pay later products, they struck a deal with KKR and they sold some of their loans. And so they in quarter 2 2023 they didn't lose 350 million in free cash flow. They didn't get really 2.5 billion dollars in quarter 4. That's just from the timing of that event. So it's actually more useful to look at the adjusted free cash flow. And if you were pull up the slide itself, I won't read this, but they go into the detail of why that is, and also each quarter of like the adjustments that they make to on a separate slide. So you can see here that free cash flow actually looks much better under Alex Chris than Dan Schulman. So this was Alex Chris's first quarter. The adjusted free cash flow was a little bit smaller. Quarter 3 was actually better, but first quarter was phenomenal, $1.8 billion. Second quarter was over $1 billion. Third quarter was 1.5 versus where they were under Dan Schulman. It just wasn't as stable. Actually, I was looking at previous earnings too, and it was actually much smaller. The free cash flow actually was stagnant since COVID days. It hadn't gone up at all, and under Alex Chris, it's continuing to increase. So here is the notes on that. The timing impact. I love that they actually break that down every single time, so you don't have to hunt for like why the adjusted is off from the standard free cash flow measure. And here it is, $1.8 billion that they did this quarter in buybacks. We already looked at that earlier. You can go back to that SEC slide. Well, it's just right here. That most of those were when PayPal was under $60 a share. So great job, team, on that. On a trailing 12-month basis, share repurchases of 5.4 billion, reduced weighted average shares by 7%. Of course, there is some SBC, so net, that's about a 5% float reduction. They're not under 1 billion shares yet. They could get there, but they probably won't in quarter 4. It'll probably be quarter 1 of next year. It just depends where the price goes between now and then. And of course, there's their cash and cash equivalents. Let's see. Can you tell me who makes what money when I pay Tanner $5 using PayPal? Which bills by Chase card? I mean, you could ask Tanner if you're paying him $5 with PayPal. But no, so if you mean like in a hypothetical PayPal transaction, it depends what you're using PayPal for. If this is just sending from one peer to another, they make a very small amount. But basically, if you're using PayPal and you have a credit card attached to that, PayPal does get a very small take rate for that. And then, of course, the credit card does as well. And so, but since they're the payment processor for that, they'll get that take rate that we saw earlier in the call. So that 1.8%, 1.7%, probably actually a little bit lower on the credit card. So, any word on the advertising business? Yeah, Dr. Mark Gerther, he's the lead for that. He came over from Uber and he built their business from scratch. Um, Check him out on LinkedIn. Maybe I'll do a video separately on him sometime. He actually had a interview maybe a week and a half ago, 2 weeks ago, where he was asked about that, and he went in what the importance of it, what they're doing, what they're building. I had a couple of notes on it, but it wasn't anything that was too differentiated. And they were actually really silent about the advertising this quarter. And part of that is they basically launched in the last days of the quarter. They're not going to get any revenue from that, right? But yeah, I think that this is going to be a huge area of growth over this next year in 2025. You're not going to see much of that maybe in quarter four, some certainly, but that'll give us an idea, I think, of how PayPal is scaling because we'll get to late January when they post those earnings. So that'll give PayPal 4 months of data on how the advertising is working. And there are network effects as far as it relates to both Fastlane, but also advertising. So if PayPal is launching these advertisements and they're having incredible success with merchants, other merchants will want a piece of that. And that's one of those areas where some companies are struggling with. So it'll be interesting to see how that scales. Why did they have a company celebratory day when they knew that they were going to miss revenues? Well, the question is, there's two reasons. One is partly culture. Alex Chris has changed the culture of PayPal quite a bit. And he has one of those great things that he's done is actually realigned bonuses of people that work at PayPal towards driving profitable margin growth, not top line revenue only, not active accounts only. And there were a few other factors there too. But if you want certain outcomes, you have to align your incentives with those outcomes. So if that's the case, and it is that Alex Chris said, hey, we need to drive that profitable margin growth, that transaction margin dollars. We need to drive that free cash flow. They did that. You look at the EPS, the adjusted EPS, it was a really good beat this quarter. And so they can celebrate that, as part of company culture. But yeah, the other is there was a lot of good in the quarter too. And there was some bad. Like I'm not going to gloss over the bad, but it's okay to celebrate your wins and also acknowledge those losses. It's good for an organization. Long-term picture, exactly. $1 million new debit users was very impressive. Yes, that is a good point. Let me pull that up in the slide here. Thank you for reminding me. There were some very interesting numbers, and I need to just go back in the earnings transcript too with some of these new products. Here it is. Right here. Making it easier than ever to pay with PayPal everywhere. Now, the pay everywhere, it just says early reads here. All of these things were launched very late in the quarter, and it takes a while to scale anyway. But let's look at this. So on the Pay Everywhere program, existing customers show a 5x increase in total omni spending. That's spending in person. That's using the app. That's using just logging in your account like standard. That's using the debit cards within the first 2 weeks of sign up. That's amazing. I don't know if that number will hold or not, but that's really, really nice. And that's an early read. 1 million plus new PayPal debit card enrollments since the September launch. That's a lot, guys. They make money off of this product. That's a good margin product right there. And then for Venmo itself, which they've been putting a lot of work in, Alex Chris, it's very clear that he loves Venmo because he talks about it a lot. And Venmo's expansion beyond peer-to-peer, it's they're trying to get people to actually use that. And so double-digit increase. Now that sounds amazing. This is a small amount. So it's not as amazing as it might sound on the surface, but it's still good of Venmo debit card actives who add non-peer-to-peer funds. And so, it's one of those things that they're trying to capture. I think there was, yeah, that's not something that, well, it talks a little bit about some of these other successes and partnerships that they were rolling out. All of this stuff basically made no difference for the quarter because it was so late in that quarter. Some of that will begin appearing in quarter four and then really begin to scale in 2025. So, Yeah, some good numbers there. Just joined, just curious to know why the revenue miss. Rumi, that was earlier in the conversation here, is one of the first things that we talked about. But basically, it's not unbelievable. Alex Chris had said in quarter two that what they were doing was shifting away from solely focusing on those top line numbers, the active users, which have inflected year over year, and that top line revenue, because they actually want to make money bottom line. So you can think of it this way: if you were just looking at your money that you were making in your bank account, you're like, okay, great, I'm making $10,000, but if your expenses were $12,000, that's minus 2,000. So it'd be better if there was a way to get that. Let's say you start you focus more on spending less, and so but your income falls as a result. So all of a sudden you're just making 9,000. That's a 10% decrease, but all of a sudden you're spending 8,000 instead of 12,000. So net you're actually up by quite a bit. So the net numbers improved. That top line revenue didn't, and so where this is from, you can go back for the full details, but basically with Braintree, they are having these conversations with merchants saying, hey, we, under the previous management, had basically sold these things at a very, very low margin. Now we want to talk to you about the improvements we've made in Braintree, and we expect a higher margin. As they have those conversations, part of that is some of the companies are saying, well, fine, I understand where you're coming from. We'll give you that higher margin rate, but we're going to use your services just a little bit less. And so that's why Braintree has slowed down some. How does total payment volume go up and revenue go down? It makes no sense. It's all about that mix shift. So you have the unbranded and Venmo scaling much more fast than the branded, than the cross-border, than the international. Those things have slowed. Those are higher margins. So that's one of the ways. EPS beat without top line growth can easily be produced by accounting shenanigans, especially with such a big layoff. This revenue miss was so surprising and disappointing. Yeah, I agree. EPS can be manipulated, adjusted EPS especially. But what really can't be much is that free cash flow and also the transaction margin dollars. We looked at that earlier in the conversation here. I won't go back, but check that out. That, to me is meaningful, highly significant. That's net. That's what they actually make on. So, if this trend continues, revenue like actually shrinks quarter over quarter or something in a sequential way in quarter four, that would be tragic because that's that should be their best quarter, right? But the revenue will not be significant. It's probably going to go up maybe 4%, maybe 5% year over year at best in quarter four. Not great. But for me, it comes down to that bottom line. How did they actually do for free cash flow? How do they do with transaction margin dollars? Are they continuing to inflect on that? Are they growing active users? And how are the new products scaling? So quarter four, I think, will tell us that. Yes, light mode. SoFi is over 10, so I will stay in the light. I can afford electricity. I think the street likes profitability more. Yes, this is a really good point. Let me see if I can find it right quick. I think I retweeted this, that the day after PayPal's earnings report came out, they had just a flurry of upgrades and price target increases and improvements. And you wouldn't think that based on their actual, results and the stock price. But ultimately, the street really likes certainty, and they love and crave profitability. That EPS is the most important thing. It can be manipulated, more important than revenue. The revenue miss wasn't good, though. I'm not going to sugarcoat that, but it is what it is. It happened. And so I think that there were two price targets that actually were lowered. And I believe I saw about 15 that were increased and improved, some dramatically. One actually right before earnings, that was kind of funny as well. They should promote buy now, pay later more. It's an obvious category that could grow the fastest. Yes, buy now, pay later for PayPal is a little bit interesting. Let me show that. Ooh, add it to the stage. All right, and we'll hide that. So they did give some color on that. So one-time checkout pay sheet driving 15 to 20% increase in buy now, pay later attached rates. So they are ramping that. But the end all be all of the buy now, pay later is really just to drive branded PayPal more than anything. They don't really care like an Affirm, like a Klarna, on actually holding the balance of these, and they actually do sell the buy now pay later loans over to KKR. I'm actually going to have to go look, and if somebody knows, I'm not going to look right now. Was that KKR deal just for a year? If so, they may re up, and we may see that one time big boost of free cash flow as a result if they re up like they did before, as buy now pay later continues to scale. But yeah, largely this is something that will drive a branded PayPal growth. So um, it's a good thing. They don't need to necessarily just focus on that exclusively. They have this incredible suite of products. That's what they're looking to scale. So the stock trades like a tobacco company. It has the worst PE ratio I've seen for a tech company. Something is seriously wrong. Yeah, I'm not sure what you mean by worst PE. Like, you mean lowest or highest? What do you mean worst, Daniel? But yeah, it trades where it's at now. It's not trading like it was in the low 50s, like PayPal was going out of business, like it was dying. It trades like it's going to grow very slowly, like it's not going to disrupt anything. It's going to take a while, to see these new products out. I still think it's undervalued right now. I think this should be a triple digit stock. I do think that in the next 5 years, and it will take some time. It's not going to rise up like a Meta or something like that. But I think that they're going to put in a new all-time high with the leadership that they have in place, with the products that they have out. And this wasn't the best quarter. It was the worst quarter of the year. Quarter one was phenomenal. Quarter two was really good as well. And even quarter four previously was good. Yeah, the lowest PE, yeah. It's depressed, but they do need to show better top line growth and just some consistency as far as margins, I think, for the street to reward them. But it was, I think, one of those things that I did see that the street really appreciate was the year-over-year inflection on user growth. That's a good thing. It's not the most important number for PayPal, but it's one thing that bears would consistently cite. And a worry was like, hey, fewer and fewer people are going to use PayPal over the years, and they're getting outdistanced by others. That's actually not the case anymore. All right. Well, I think that we'll wrap up here in a couple of minutes. If there's another question, go ahead and throw that in there. But as far as what I'm doing with PayPal, I've got the share position that I like. I have, the leaps that I like. No short dated options. Some of those actually, I made a profit on, surprisingly, as I was scaling out of them. PayPal rose up a lot, which is good. Yeah, it's a position that I'll continue to add into slowly. If the price continues to fall, if we see like 70s and 60s, I'll buy a lot more. I sold some cash secured puts. I'll probably keep doing that on PayPal as well. And if I get assigned, so be it. I view here in the mid 70s, personally, and you do you, that this is a pretty low risk company because they are growing. It's not super fast growth, but the bottom line growth is very good. New products are coming out. None of that is built into guidance at all. None of that factored into this quarter. It's still very early innings. But next year, it's going to meaningfully improve PayPal as a business. And I think that they'll actually begin to disrupt some of these industries. The most frustrating thing is they've been sitting as a business on this gigantic pile of data. And you've heard the phrase that data is the new oil. It's like having untapped oil reserves that are just massive and doing nothing with it, not building any infrastructure, doing nothing, just sitting on it. Now under Alex Chris, they've realized like, hey, we have this treasure trove of data that's double-sided from merchants, 35 million merchants, from users as well. That's over 400 million users that are active. And we can use this to be able to offer a couple of different ad products. One is on the front end, one is for returning users. And it seems like they're actually doing a little bit more with that. Mark Gurther's comments a couple of weeks ago on a webinar that he did were interesting. They're not just stopping there and just saying, hey, good enough. But advertising is a phenomenal business that really will add value to the system. They actually have a flywheel, whereas they didn't in the past. What leaps do I have? These are for the end of December 2026. I believe $100 strike. It might be $90 strike. I'd have to double check. It's a little bit out of the money, but not ridiculously so. I just want to give myself plenty of time. I was buying them when they first came out, shortly after they first came out. And I just have a few, like relative to my position. It's not that large. Position size. What position is PayPal in your portfolio? I think it's third right now. I'd have to go and look. I've not looked in a couple of weeks. SoFi has risen a lot, and SoFi was actually my number one pick for outperformance a month, 5 weeks ago. Out of every stock that was on my watch list, every stock that I own and hold, so about 50 stocks that I follow, um, to outperform from when it was trading in the low sevens to the end of this next year. They have phenomenal tailwinds. Now, long term, I still think PayPal will be as good as a SoFi investment. It's not going to be as exciting in 2025, but when that revenue comes in from these other products, I think that's when the street's going to be very, very excited and interested at what PayPal does. Look at most recently, what happened with Uber and also Amazon under the same guy that PayPal is scaling advertising with. It's crazy to me with over 400 million users. They should be able to harness that with so many added income streams. Yes, especially if Uber has a $1 billion ad bus. I imagine PayPal should be able to. I think so too. It's a very different advertising structure than that. It's closer to Amazon's, although it's still different there. But yeah, it's hard to see the exact same guy that scaled it for Uber and also for Amazon that he would fail with even richer data. Like, listen to him sometime. He is really, really excited about this treasure trove of data that PayPal has done almost nothing with over these last years. The ad business or any business isn't built overnight. That's true. It takes time to scale, but it is launched. They have launched these products already, and Dr. Mark Rather, he is no slouch when it comes to this. He knows exactly what he's doing, and so yeah, it's going to scale. Roomy, they told you that they're no longer sacrificing margins for revenue. Exactly right, Trent. What does Alex mean? PayPal is a commerce company now. So they used to just be primarily a payment processor. Since they're offering advertising and through smart receipts, when people buy something from PayPal, they're actually driving users to merchants. That's what the advertising vector is. That's what Fastlane does as well. Is it more than just a payment processing company? They're a commerce company. Now, that doesn't mean that they're going to be like an eBay or something like that. That's a different model. I have a gazillion January 2027, $95 and $100 call spreads. If PayPal stays above 100, I will make 6x. I make nada under 95. Alex dude needs to lay eggs in 2 years. Yeah, I think it'll be really good. If it doesn't, then there's something wrong with the thesis. But macro is good. They have a lot of things going for them. And yeah, I do appreciate as we close out here, if you give me a sub, if you hit a like. I'm new to this. There's a lot of ways I can improve, just like PayPal's earnings, frankly. They probably have better earnings than this stream is, but there's 31 of you right now. I appreciate you guys tuning in. We'll do this in the future. Maybe once a month would be good. But thank you guys for tuning in, and happy investing to you.